Welcome back to Ask Dad. On today's video, I wanted to do a quick review of how I look at trading in markets like today where the market is way off, there's a little bit of blood in the streets, and I wanted to focus on a particular stock, Intel. So jumping right in, if you go to a website called Seeking Alpha, it will give you reviews of the overall market as well as some of the stocks that you may be following. So I have a portfolio of stocks down here that I follow that I'm watching to see how they're doing in a given day. Today you can see that there are some stocks that are way down. OLED, PayPal, Amazon are all stocks, but one that I'm watching in particular that's not on that list is Intel. There's a quote that's attributed to Warren Buffett that talks about be fearful when others are greedy, be greedy when others are fearful. And what it talks about is buying stocks when people are really afraid of them and buying only good companies, of course, and selling good stocks when people are really paying too much for them, when they're being greedy and wanting to just capitalize on that FOMO action. And a stock that's really been in the news in a hot sector is Intel. Intel is one of the larger chip makers in the country, in the world actually. They make the majority of chips that go into the processors that go into laptops, desktops, and a lot of other items. And they've been doing really poorly lately. They have been not benefiting from the AI boom, and they just have underperformed the market as a whole. In fact, if you come in here and look at the price of Intel, and let's bring up a 1 year history on the stock, you can see they ran up a little bit in the beginning of the year, and then when every other AI related stock has been running up, they've been coming way, way, way down, and to the point where today they had a huge miss on their earnings reports, and they're losing almost 30% of the stock's value that you can see has already declined. So when I look at headlines, one of the things I'm looking for, and keep in mind, this is not stock market advice, this is simply what I do. If you're looking at investing in the market, make sure you have the appropriate knowledge and experience, and if you don't, get help from a financial advisor, from someone who knows your situation better than you or knows the market better than you. Anyway, back to this. One of the things that I look at is what's the news? What are the headlines? Is this a stock that is heavily in favor? Is this a stock that is being beat up by the media and maybe there's underlying strength? And one of the signs that I saw this morning is right here, a headline that says, Intel turn off the lights. Now, that is a play on something that happened way back, I believe, in the 70s in the city of Seattle. There was a billboard when Seattle was really going through struggles and Boeing was struggling and not doing well. People were leaving the city in swarms, and there was a billboard that said, last one out, please turn out the lights. And of course, if you had been smart enough to stick around in Seattle at the time and buy property, you would have done phenomenally well. But so I look at something like this and I think, okay, if there's blood in the streets, if everyone's abandoning Intel, is there maybe strength that I should be capitalizing on? Is there maybe strength that I should be looking at this as a buying opportunity? Because not many companies lose 30% of their value in a day, and if they're strong, they'll be able to bounce right back. So here's what I'm looking at in Intel, and this is not going to be an in-depth review. This is going to be just a simple high-level quick check of, am I buying the stock today? So what I would look at is, how has the company done historically? So let's first zoom way out. Let's do the all tab here on MarketWatch's website. And you can see that the stock had a huge run up in the 2000 range. Then it dropped off, and then it's kind of gone up and down, and then it had a big run up in the 2018 to 2022 timeframe, after which it dropped off. Now, what I'm looking at here is, what's the history of the company? What have they done? Now, I was investing in the 2000 timeframe. That was the tech crash, the big bubble that happened around the dot-com era, where anything that was tech related ran way up. And then, of course, when people realized that it wasn't going to change everything and not everyone can make money when there was no profits, it crashed along with everyone else. Now, Intel did well after that. Intel did fine. They produced a lot of things, a lot of chips and a lot of processors for people, and they're still a great company as far as their product goes. However, they're not keeping up, it doesn't look like, with some of the other competitors, and they're not benefiting from the AI boom in the way that people thought they would. You can kind of see that here, where they ran up from the 2022 timeframe from the $29 range up to $46, and then now they've crashed back down to $20. So, okay, would this be a good opportunity to come in? Is this a good entry point? Well, let's kind of zoom in and see how they've done over the last year. And you can see that they've really crashed when everyone else has been benefiting. Okay, well, maybe there's another opportunity there. Let's take a quick look at their earnings and see what they've done. Well, in the last 52 weeks, their stock has ranged from $20.42 a share, which is a little bit higher than right now, to $51 at a high point. So, okay, well, they had a $51 high point. Maybe, just like when we did our video on Jack in the Box, their earnings per share are going to be much better than their competitors. Well, let's go down and take a look at that. Their PE ratio, according to MarketWatch, and I've compared a few sites, and you'll notice if you compare a few sites that these numbers do vary, but their PE ratio is about 90. That's pretty high. The average in the stock market right now, I believe, is somewhere in the mid to high 20s, and we're talking about a 90% PE ratio. So what does that mean? It means that they're not making a lot of money. If you look at the news, Intel is now talking about cutting 15,000 jobs. Generally, companies do this in a way to shore up profitability, but it doesn't look like they're planning on growing. It means maybe they just weren't managing very well. So a 90 PE ratio means I've got a company that's struggling to make money. They're letting a lot of people go, which means they're probably not planning on growth, even though in other articles, and this is where you have to do your research, they've brought in a lot of money from the federal government from the CHIPS Act. So if you come over here, I read an article on NASDAQ.com where a top investor said it's time to hit buy because he feels that this company is struggling right now, but they will bring in money. And some things that he talked about is, well, they've lost 40% of their value in 2024. The weakness makes them a valuable investment. But we have to ask why. What's the catalyst? Always look at what's the catalyst that's going to make this grow. So it talks about Intel's received $8.5 billion from the U.S. government via the CHIPS Act. And what would that mean? Well, we'd have to look into it, but it should mean that they have received a lot of money to build a facility in the United States under the CHIPS Act, where they would then be able to start developing more product that could go to market. That may be, but it also may be that's several years out. And in the meantime, they could languish a little bit. Now, it also talks about the analysts on Wall Street are less enthused, and that's something that I'm interested in. Because 16 of the analysts, only 3 are a buy, 12 are hold, 1's a sell, so that tells you that they're not sure either. So what does this mean for me? Well, let me take a look at another stock that's down today. And this is one that most people know about. It's Amazon.com. And if you look at Amazon, let's take a look at let's go back to an all factor here, long-term history of Amazon. And we can see that Amazon, of course, has run up. They've had some downs, and they're consistently trending up. Let's see how they've done the past year. And again, this is all high level. There's a lot more research that needed, but you can see they've had an upward trend over the past year. They've had an upward trend over the last history. Let's go out 3 years. Yep, we've got ups and downs. And if we just go to the last month history, Amazon's had some struggles. Well, let's look at the same metrics that we were looking at. The 52-week range, keep in mind they're at $161 currently. The 52-week trend is 118 to 201. They're kind of mid-range. They're not at the bottom. I like companies that are at the bottom if they have a viable story. But their PE ratio is 38.97. That's significantly less than Intel. What's the catalyst that makes me believe that Intel's going to grow faster than Amazon? I don't know. So at this point, what I'm doing with Intel is I'm putting it on hold. By hitting pause on what I mean is I'm not going to buy right now, but I'm going to watch Intel. If I see that it appears there's some catalyst, yeah, I may miss out on a couple dollars of share value in what I could get if I buy them at the bottom. But if I've got a broken company, if I've got a company that can't figure out their direction and how they're going to go, I don't want to be in that stock right now. As opposed to Amazon, I'm confident Amazon's going to get their arms around this. They've historically done well. They're down 12% today. This may be a good entry point for Amazon. I'll have to do a little bit more research. Again, I'm not going deep dive on these stocks. I'm looking at different things and wanted to share what I'm seeing. If this type of content is helpful to you, please do like this video. If you would like to see more, please do subscribe. And if you know someone that may benefit from it, please share this video with them. Thanks for being here. We'll see you on the next one.